All right. This has been an interesting day, everybody. We're starting pre-market prep at the close a little early today. Joel Elconin will be here at 3:30. Kenny Glick will be here at 3:30. But for now, it's going to be me and my good friend Mitch Hotch, who I'll bring on in a second. And we're going to talk through this market because it has been a very look. This sums it all up. Okay, stock market crash has been trending on Twitter all day long. So it's been one of those days. We were wondering if Jerome Powell was gonna talk up with this market, as he is known to do, and he tried for a minute there. It looked like he was gonna, and then they flushed it. Let's bring on Mitch Hotch here. We're both going to share our screens. We're going to go back and forth. Mitch, what's up, man? How has today been treating you?
Whew. It's been a wash on my portfolio SPACs, so I'm keeping an eye on it, but definitely starting to get towards the point where even, I have rules, and if it breaks, it breaks. So they're getting towards that point, and that, you got to keep an eye on it, and you got to just stick to your rules, stick to your plan that you set, because I've always learned every time I go against my plan or change my plan, that's when the real pain begins. So, hey, if you have to cut losers, you have to cut losers. And I always say, just stick to the plan. Your original risk assessment was probably what you wanted to stick to, and then you can get very subjective in days like this.
Yeah, for sure. So I'm seeing a lot of sarcasm and derision around on social media. A lot of especially from the professionals, people are like, "Stock market crash, stock market crash. We're down 1%. We're green at the time. We were green. We're green today. We're down 1% today. What crash? What crash?" Well, look, it depends on where you are. Okay, the indexes, the S&P is down 1.5%. That's not a crash, okay? It's not. That's a red day, but that's not a crash. But if you own Bitcoin, and you're down 6% today, you're down, the Bitcoin futures at least are down, almost 10,000, what is that? $9,000, $6,000 in one day. If you own SPACs, like myself and Mitch, if you own ARK funds, it is a crash. You're getting creamed.
If you own anything in the NASDAQ,
yeah,
NASDAQ is the one getting pushed the worst.
NASDAQ is down 2%, so that's not nothing. The Russell is getting punished. The Russell is down over 3%. If you own small caps, basically if you own any stock that's been going up for the past few months, you're getting crushed here today. So yeah, that really pissed me off, because I'm seeing a lot of people, a lot of professionals that are like, "Oh, this is not a crash. You guys don't know anything." Well, yeah, it's not a crash if you own like the SPY, but if you own, it is a crash in these Momo names, right? ARKW, which I own, was at one. Let me pull up the chart. So, okay, I'm yelling. I'm shaking my fist at the Twitter people. ARKW. Let me zoom in here. Was what is that? 190 something? 190? What, 3 weeks ago? And it's down to 146 today. Yeah. That's pretty bad. So it's to be expected, right? You have to know this is the name of the game if you're going to own a high flyer. And I know that, and I'm not panicking, but I get a little annoyed when people are like, "This is not a crash. You guys don't know anything." Yeah, because it depends on what you own. And a lot of people are new and genuinely haven't experienced this type of environment before. A lot of people came in April after the bottom, right? April, May, June, the bottom is long gone by then. Okay. So I'm talking about last year. So yeah, I get upset when people talk down to newer investors and newer traders as if they don't know, when this is their first time experiencing this sort of behavior. We've gone basically straight up since the bottom, and the bottom, the COVID bottom from last year. It was March 23rd. That was the day that the Federal Reserve, Jerome Powell, came out and said, "We're going to throw as much money at this thing as we possibly can, monetary stimulus." And that was the bottom. We've gone basically straight up since then. And so, yeah, for a lot of people, this is scary, and I don't blame them. That's my rant.
The question is, where's the money hiding, right, Spencer? Where is it hiding? Where is it rotating to?
Oh, now we're talking. Now we're talking, Mitch. Where is it? So, if you listen to PreMarket Prep this morning, you heard us talking about oil and energy and the banks, and you heard Dennis probably say, and I tried to get him to say, and then he eventually did at the end of the show, that he wasn't going to come in today and chase the banks. He wasn't going to come in today and chase XLE or chase ExxonMobil because he fades moves. But that being said, if you pull up the XLE, the largest energy ETF, it is up today. Look at that. Oh, let me pull up a 15-minute chart here. Okay, 15-minute chart.
Yeah.
No, let's go to a 1-minute chart. Forget that. 1-minute chart. This is today. Yeah, it's in the green. Relative strength. It's up 1% when the market is down 1.5%. Nice. Okay, so that's one location. The other location, where is it going? Where's the rotation? What about the financials? Actually, no, I take that back. What about the utilities? Nah, not really. Not really.
You want to know where I see something in healthcare providers and services? So
XLV? No, UNH. Okay.
HUM, HCA.
Okay. And you know where else we're seeing it? Although I don't know if this is still true. But GameStop.
It is up 5%. It was up 6% like a second ago, but looks like it took a little bit of a downtick there. But oil, could the big boys be in oil? Is that what's going on here? And they're hiding in oil? Because oil and gas is the only thing on my side here where I could name like 20 tickers in the green today. So that's what I'm trying to pay attention to. At the end of the day, maybe I should have been grabbing some oil. And this is a trade that for a long time has been talked down upon. So, I mean, if you look at overall, XOM up 2.8%, ConocoPhillips up almost 3%, PBR up about 2%, Oxy up about almost 4%. Fang, that Diamondback, that one's up 7.4%. So if you look at some of the smaller names, they actually are performing better. SSL up 7.2%.
Nice trade, Cat Lover. Cat Lover bought Roku at 349, sold at 369. Nice job. That's a good trade. I don't know if you did that today. You do that today? I guess yeah. Nice trade. Nice trade there. But hey, days like today are going to happen, right?
You want to know an interesting chart here, a little smaller chart? WTI,
like as in like West Texas. Yeah, this is oil. This is oil.
It's oil.
Yeah,
it's oil.
Yeah, that's oil.
Look at his turnaround since essentially November. If you look at the chart,
you want to have some fun. Let's look at some leveraged oil stuff like NRG, like NRGU. Up 5%.
There you go.
What do you
Gush?
Gush? Yeah, Gush.
Gush.
Look at Gush. Gushing? Up 5% today. Again, these are leverage plays. These are short-term plays. Don't mess with this stuff in the long term. Use it as part of an overall strategy, not necessarily to make a call. And if you do make a call using one of these instruments, again, short-term instruments, not buy and hold. Thank you very much.
There could be a potential short squeeze here. Potential short squeeze I'm seeing, Spencer.
What are you saying?
Genius Brands, man. Genius Brands is up 14%. I might find a place to hide.
What is the float?
What is going on in this?
Hey, what is the float? 280.
Like we got some news here also.
All right, let's go down to the news feed here in Benzinga Pro. This is silliness. Come on. So, okay, these are all the Genius Brands headlines we have today. They said they expanded their distribution with a launch of a new digital channel. That's not really that interesting to me. They signed, what do they have? A new Marvel Studios show. Okay. Let's just read. Why is it up today?
I don't know. This is when I'm gonna have to start checking the boards. Checking the boards.
This is silliness.
I know. I can't blame you. I mean, that whenever I start seeing stocks now up 20%, 40%, don't have an answer. You guys know where I'm looking at.
This is silliness. But that being said, if I go back to my share my screen here and I look at the float, let's just compare the float. 285 million shares outstanding is so that's not that small. That is not that small. So I don't know what the short interest is. Again, short interest is a very, very hard metric to get. We are going to get an updated short interest number, as a matter of fact, in how many days? What month are we in? March. We will get an updated short interest number on the 9th. So next Tuesday. So the latest short interest we have is from the 24th of February. It's a moving target, right? So it could be a short squeeze. I don't have that number handy.
It could be. I know that a lot of people were, up and down on it, but, from it coming up like that quickly, I would definitely pay attention to it. At least keep an eye on it. I mean, when you don't find too many plays out there, you got to maybe find the one that is doing a run. So yeah, I'll definitely keep an eye on that one.
Someone in chat is Galliera saying check SLGG. I know there are a few Benzinga people that are in this. I am not, and I will not. This one's not really my cup of tea. But that being said, SLGG, what the freak is going on there? 46% it's up today.
Yeah, that's been having some good news lately. I mean, you could also look at one that has been running with AESE, Allied Esports. This one's up 20% also. Looks like the esports got another run, another push. And if you really want to look at the leader in there, look at the one that was on Power Hour. I think it's Campbell. Yeah, GMBL.
Oh, yeah, Gamble. Yeah.
That's what I just call the ticker so I can remember it.
Oh, that's good. Riley's saying there's a rumor of GameStop. Gosh. All right, you know what? What is GameStop's cash position? Serious question. What is GameStop's cash position? Because they didn't raise any money when they had the chance. Maybe they were afraid to. They didn't know if the government was going to come down on them. But does anyone know how much cash they have on their balance sheet? If not, I'll have to go look it up. I can go into the filings in Benzinga Pro, but that'll take me like 5 minutes. I don't want to deal with that right now. So if anyone here knows how strong GameStop's cash position is, post in chat, because now I'm curious. Because GameStop's not buying anybody. That's my opinion. I don't know that. That's just my opinion. Okay, 3:22 minutes. We're going to have Joel Elconin and Kenny Glick from hitthebid.com on around 3:30. If you have not heard Kenny, this is a great day to talk to him because Kenny is self-medicated and always has a fun perspective. And he's been through this dance before. He's done this dance 1,000 times. So it's a good day to get Kenny's thoughts on this market.
Yeah, I love to mess with Kenny. I've done a couple of shows with him before, so got to let him know about BINGO.
Look, and chat's post and takers, and they're all value, right? I mean, GE, which is
there you go. GE has been an interesting chart.
It's value. It's all.
Let's talk about it.
It's all companies that we haven't cared about for a decade. Value hasn't mattered for. I'm sorry, Mitch.
You got it.
All right, it doesn't matter. Value hasn't mattered. Value hasn't mattered for over a decade, right? It's been all about growth. It's all about the FANG stocks, the mega cap techs, the Facebooks, the Apples, the Netflix, Google, Tesla, Bitcoin. We don't care about value. Nobody cares about dividends. We don't care about that stuff. Well, now we do. Apparently, now we do.
You know, one thing. This is an impressive story because really, there was a time people were calling GE done for.
Dude, I
turned it around, man.
I learned a hard lesson in GE. Was it 2 years ago? I was like, here, can you zoom out and go to 2 years ago on the GE chart?
Yeah.
Okay, so when GE really started to shift the bed, which it was in
2017.
It was 2018. They're really starting to shit the bed. 2017, 2018, and in 2018, I was like, you know what? I'm going to step in here. I'm going to be a hero. I'm going to call the bottom. I'm doing it. And I stepped in at around think it was like 13. I bought it around 13, which actually is where it's at right now. but that's besides neither here nor there. So I bought it at 13. I watched it go to like 5 or 6, and I was like, well, shit. And I basically ended up using the washout last year to sort of rebalance my entire portfolio, and I sold it last April for, I don't know what I sold it for, 7, 6, 7, somewhere around there. The irony is, if I just waited, if I had known that stocks only go up, then I'd be back to scratch right now. But I learned a hard lesson that calling bottoms is not a viable investing strategy. I did the same thing with Kraft Heinz. I did the same thing with Under Armour, and I did the same thing with Royal Dutch Shell, and I lost on all of those investments. And so that was a good lesson. It's good to learn those lessons, right? It's good to take big losers like that. And I was a big loser in GE, and it pissed me off. But I thought I was a hero, and I was a zero. I was nobody.
Yeah, so. I can't wait to ask what when Joel comes on in just about a couple of minutes here, what he thinks about the SPY actually breaking that 380, and what's the look now, because it looks like we broke my line in the sand. And
the one thing that concerns me, and we're definitely going to hear from Joel, but I got a text from my dad today, like, should I buy the dip?
Oh, like, no.
I get these texts now, like if not from my dad, then from a friend or two, at least once a week. Every time we have a day like today, it seems like someone's asking me for, and I'm just like, guys, don't ask me as if I know, as if I'm supposed to know the direction of the market, which is ridiculous.
I mean, I wish,
but
I'd be listening all day, Spencer.
Yeah. Okay. What else was on our? I mentioned GameStop briefly, but I want to bring it up again because I don't know what if you know what happened with GameStop today, if it was call options or what. Hey, holler at us, all right? Because I have zero clarity into why GameStop did what it did, and it just spiked out of nowhere. It spiked from one. Oh wait, no, let's zoom the hell in. There we go. It went from 120 to 150, right? Out of nowhere. I don't know why that happened. Do you?
I don't know, but I can tell you at least it looks like an inverse correlation there. And then it also looks like the big stocks, the big caps, the big boys, the FANGs getting hit hard, man.
It's good that you mentioned that inverse correlation because we've seen that before. And it seems to be as GameStop goes up, SPY goes down, and vice versa. And it's not perfect, I think, but it's notable that GameStop's going to close up. I mean, it should close up around 9% today if things hold steady, and the market will close down. So for today at least, that correlation holds steady, which is interesting.
What's going to get me interested here, Spencer, just an industry that I'm going to look at for the pullback, just because the story has been good, but this goes to tell you that stories can change, guys, in an instant. Look at CGC. This is the chart that, for a second there was looking fabulous. It got up to a high of 56. It went back to the highs of 2018. And this is how quickly a story can change, guys. And this is why you got to know, and I always stress the 3 factors: story, fundies, and the technicals, because things change, man. Things change. And then if you don't know kind of all 3, then what I recommend is you just kind of at least dip your toes in all 3. And understanding definitely helps, because there was times where, a stock like this technically would have looked amazing for me ripping through that high. I could have been buying the high of the day, doing a little day trade on that, but no. I learned a little bit about that and how quickly stories can change. And look at this one, 56 down to 30s, and who knows where it's going to stop.
What's interesting though, and we'll talk about this with Joel and Kenny in a minute here, but a lot of these stocks that had earnings last night, they have not all moved them together, right? If you look at OKTA, and I don't even care about the numbers, right? The numbers don't even matter, right? OKTA got crushed after hours, got bought at the open. Compare that with like SPLK, which popped after hours and got smacked at the open, right? And look at Snowflake, which did basically a mixture of the two. It went up, it went down, it went up, it went down, it went up, went down, went up, right? I mean, there is no rhyme or reason that you can apply to. There's no pattern you can apply across the board. And these are all they're all peers in a way. I mean, they're all growth tech in a way. So maybe if they don't do the same business, they at least tend to trade the same way. But it is 3:30, which means it's time for pre-market prep at the close. Let's do this thing.
To boot me. Give me the.
All right, it is time for pre-market prep at the close.
3 consecutive highs, opened, matched yesterday's low, and then once it took out there, that's all the breakout momentum traders needed.
Joel, you're not under your desk? Oh, I would have
but
you'd be under your desk.
I'm kicking myself though, Spencer.
Yeah?
I missed a new super extra reliable indicator.
Oh, I don't know what that is.
What color shirt are you wearing?
It's the stupidest thing I've ever heard.
No, I've never seen you wear a red shirt before. It's the Spencer red shirt indicator.
Stupid. Kenny's wearing a blue shirt, so I don't know what that means. Kenny, get on a red shirt or something, or put a green shirt on, Kenny.
Do you know that I will not wear a red shirt? I've never bought a red shirt. I will never wear red and scarlet and gray. I very rarely wear green. Do you know that?
I know you hate green. I know.
Do you know that? It took Lisa about 5-6 years to figure it out. Like, we'd be looking for some clothes. She's like, why won't you wear anything red or gray or green and white?
I love your superstitions, man. I love it. All right.
I do got my NCAA Final Four. This was from San Antonio. Big game tonight against the Spartans. I'm worried they're going to shut us down like Illinois did, but people don't tune in here to listen to me talk about basketball and the Spencer red shirt indicator.
No, they don't. They want us to talk stocks, and let's talk stocks with Kenny Glick here from hitthebid.com in his neutral.
Oh, we're bringing him in already?
Sure, why not?
Okay.
Why not? What's up, Kenny?
Let me get in there. What up, y'all?
How we doing?
All right. How you guys doing?
Warlock at Hit the Bid Radio.
It's actually, yeah. Well,
you want me to change that?
Well, it's my email is thewarlock@hitthebid.com, or I'm just at Hit the Bid Radio. That's my my handle. Are they still calling it handles? I'm not hip anymore.
I think so. I think they still call it handles. Well, I mean, we call handles like in the market. Speaking of handles, we lost a few today.
Yeah, I've been waiting 13 years for these last 2 days. Yay! I've been getting my ass kicked for 13 years.
That's what every value investor is saying. Like, finally. Oh, it took a decade. Finally, values in play.
Yeah, I've been calling for the crash.
No, Kenny. Well, first of all, we gotta introduce Kenny Glick, Hit the Bid Radio. Probably one of the best traders and one of the most humorous guys I know on Wall Street. He's looking a little clean shaven today. I don't know if the wife got on your ASS or what, but you're looking pretty clean cut. But what I want to say is, I follow you on Twitter there, and you turned a couple days ago, and I didn't talk to you. I could see it in your tweets, but you kind of felt like the momentum. You felt it coming out, right? I mean, you're the pumper. You know how to chase these things higher. What was it? Did you wake up on the wrong side of bed? Was it the VWAP? But I could tell you were like, man, this is something's to turn. And the turn in the market's the most important thing. What was it, Kenny? What were you looking at?
It's a big question. I've been wrong. I'll admit. I started getting out of stocks, a little bit prematurely. I missed a lot of that move. I thought DraftKings had a nice run up to the 50s. I was out of that. Twitter in the 50s, out of that. The Neos, the PB, the Jumamas, and all that stuff. So, really, I've been kind of getting bearish for a long time because I was buying penny stocks, and I've been doing this for 30 years. In 1999, in 2000, more like February of 2000, that was when the penny stocks started moving. Guys, some of you guys have never been trading back then, but in February of 2000, when everything was going crazy, I worked in a firm where we had a contingent of Hasidic Jewish guys, and they had their own little section, very quiet, very to themselves. And then for like 2 weeks, they're dancing around, throwing things. They're going nuts, like out of their minds. Like, you've never seen anything like this before. Hava Nagila, the whole thing. And I go in there, I'm like, Isaac, what's going on? He's like, Kenny, we have never seen things like this before, ever. Give this market 3 weeks, everyone's going to die. Because when these stocks move, there is nothing left to go up. And I've been waiting for this moment since 2000, because the other day I woke up and it was like about 3 weeks ago, and I was like, I own 3 penny stocks right now. What's wrong with me? That's how psychotic that this market has been. But it's really a combination of all of that. The frenzy into a sector, SPACs, your EVs, nothing's ever going down. Every pullback is a buying opportunity. And the one thing I was waiting for was a little uptick in volatility. We finally got it.
Yep.
But I really call this the Cathie Wood top. We are putting this woman, which I've never heard of her, on a pedestal. She's everywhere talking about the same thing. You know what? Everyone's a genius when you go up for 13 straight years. And I'm short in Zoom, and I'm a nobody nothing. I'm looking at a stock gapped up 40 points 2 days ago. It's a company that ran from $20 of obscurity to $550. I'm a shorter, and I'm going head to head with Cathie Wood, and I'm winning. Woo! So right there, I'm like, all right, this market's done for. I'm outsmarting Cathie Wood. I must be onto something. So I've been coming in the last couple of days looking for any reason to sell. And this morning, when it ripped up at the open and then started cratering, oh my God, it was like it was Candyland. But again, I'm more of an intraday trader right now. I'm completely liquid. The one position I decided to hold on to was Tiger. Me and Raznick getting lit up on that thing, and just I'm in from 8 and 12 and 27.
What, bro? Uninitiated 2-for-1 stock split.
Yeah, exactly. Like half these stocks.
Let me go back to one thing that you said there, and I think it's a really important point, and I really want to hammer it home, is that when the volatility heats up, it's usually not good, right? I mean, volatility is good if you're trading, you're in and out. But when you get excessive volatility, that just means that there's more indecision in the markets. So the one thing I like to use, I don't use the VIX. I don't know if you use the VIX. I mean, until yesterday, I thought VIX were like cough drops, but I see the 9-day average range.
That's not true.
I know. Creeping up. That tells me the market's unsettled, really. And if you think about it, on the S&P, after we had that excessive volatility in March and we kind of settled down in April, it was just like, you look at some of the summer months. I mean, we were going higher. We still had some volatility
every day,
but the 9-day average range started to come in, right? People knew what they wanted to do. They knew they missed the bottom. They had to buy and back and fill. You had some people selling the reps to take some quick profits, but people, eventually, me a little bit later, maybe Dennis a little bit later than other people, we missed the bottom. So on the declines, we were backing and filling. Now there's excessive volatility, and where are you going to fill to, right? Like, is today by the dip 37.2050 on a relative basis? Look at the monthly chart. That's not even a teardrop. So I just wanted you to expound on that a little bit, what you use to gauge volatility.
Well, I'm a fan of the VIX products, and they are so awful that when they do finally stop being awful, that's an indicator. But beyond the VIX, it was also the earnings reports that were coming out. We were getting blowout numbers, like numbers that you would normally, again, the Yahoo Finance traders would be making money. Goldman Sachs reports biggest quarter on ever, and the stock tanks 30 points. Walmart, blowout number, the stock tanks.
What about Apple?
WLO, they sell off. Zoom, they sell off. That's your sign.
Amazon.
When there's nothing left to do on the upside, you're going to start selling off on what's good news. And in a bull market earnings don't matter. Bull market, no matter what they said, we were going up. So it really was just like, okay, they reported their earnings. Oh, how were they? Oh, it doesn't matter. We're going up. But once we start really getting some volatility on earnings reports, that's bearish to me. Basically, when we start to care about things, that's bearish because the bull market cares about nothing at all. So once it started to care, I was like, now I have to care. I'm going to be coming in with a bearish attitude. But there's still buying opportunities today. Today was like 20 days rolled up into one. It was extreme. It was real extreme.
Yeah, let me make another point too. Like the CRM. I mean, come on. I mean, and oh shoot, I didn't save it from my article. That thing had to bounce. It got hit after the Slack deal. It bounced up. But this big candle is when they beat by 25 cents. They beat on revenues. They raised 21 and all of 21 guidance. They raised EPS in 22, but they didn't raise revenues for 22. Their sales. And they slammed the thing. I'm like, come on, baby, 3 out of 4. So another important point, 3 out of 4, selling off on bad news. Another excellent point by you. Another thing, and you're an old timer like me, and it just, going back to the markets here. I mean, the bear markets, the down days used to be a hell of a lot easier. It used to be like when the market went down, it went down for the day. You had some pops. You could sell the pops. It would close on the low, and you could decide whether or not. And I think now, and I discussed this with Dennis, with computers, the market goes up just as fast, if not faster, than it goes down. There's not that differentiation. I just wanted to get you, because I know you're an order flow guy too. How do you feel, about trading these declines and these bear markets and these rips? I mean, buy the dip and sell the rip. Some of these rips rip your face off.
Absolutely. We were part of the rip your face off morning when the market tried to sell off and then just turned. What we were doing, we were just buying everything in sight. So still the better trades for today, which is ironic for me because I love shorting stocks. We bought, NEO on that massive kibosh down under 38. We bought Tiger under 20. We had bought, what's it called? NEO, Tiger. Those are the big ones. We bought some DDD, Triple D. What's up, Triple D in the house? That stock got smoked. Again, stocks are down 50, 60%. So when they capitulated, I was looking to buy. But then after that massive rally, and then everyone was thinking, all right, here comes Powell to
pump and Powell. I know.
Maybe even ease the market and start rolling and maybe go further the leg up. We rolled back over. And once we rolled back over under VWAP, again, I'm a slave to the VWAP. Now, I cannot express that. It took me a long, long time to really appreciate the fact that we don't know what we're talking about as much as we want to believe and do commentary. When we are slaves to this market, our 1,000 share orders are not making a dent on any of this stuff or whatever we're doing. So I just follow the language of the market and with sentiment. So now when sentiment is finally changed after maybe a year, I mean, we've been pretty much bullish since February of last year. Now that sentiment's kind of wishy-washy at best, a little bit slanted to the bear side, I'm looking for gaps to be sold into, like that Zoom trade. That Zoom trade, the last couple of days was one of my, again, I could have retired on it, but I didn't want to get too aggressive because it's very hard, to your point, to stay short, but because you usually get these rips. And if you look at that Zoom chart, that was 48 hours of just beautiful selling. You don't really see that too often. No. But again, that stock was one of the ones I've been waiting to hammer.
Don't you love that? I know Triple D, he layered it out there. And he was hoping to get done, I think, at 380. And he went right on the open. And he got done at everything at 383 because that was the opening print. Right. And then it ticked a quarter against you. And then it was just, I know he I don't know how long you held it for, but he likes to cover and just move on with his life. What about?
Wait, can I ask Kenny?
Go ahead, Kenny.
I just want to know, Kenny, do you know who's on the other side of your Zoom trades these last 2 days?
Kathy Wood.
Yeah, she's buying from you.
Yeah, that's why I felt so super special. You know,
she's been buying a lot. She loves to buy the dip, so she was buying from you, I guess. You and
listen. Inevitably, she'll probably be right. I mean, the market is still not getting much return anywhere else. You're still gonna probably have a recovery. But I think finally, some of these stocks, you'll be a victim. Finally, some of these EVs may not come back. 2 of these aren't going to be around next year.
There needs to be some real pain, and there
needs to be sacrificial lambs. There needs to be a couple of these that just oh man, thank God I got out, or I can't believe I still own this kind of moment.
Yeah,
and we're in the transition right now. I thought Tiger was legit after a 50% haircut. I'm like, what am I owning here, right? But again, that's where we're at right now. Luckily, it's like one of the only stocks I own, and I thought I owned some good stocks for a while. I own a POWW. I was telling you guys about it, a couple of weeks ago. You cannot. I don't know if you guys. I don't want to get into the whole gun, conversation here, but it's very hard to find ammunition in this country right now. Everybody's buying guns and ammo, and this is one of the pure plays on ammunition. And the stock was doing well, and then they come out with a blowout quarter. And they take over a really respected gun website, and the stock just tanks. So again, I mean, it's just you got to be nimble. You got to be ready to, admit you're wrong. That's a big thing. It's okay to be wrong. Just don't stay wrong.
Don't stay wrong.
If it's getting worse, just pull the Band-Aid off. It's a very hard thing to do, to admit you're wrong and take that loss. But
you can always get back in. You can always get back in. So a lot of people don't know that you have your PhD in economics from Wharton. So I wanted to get your take on interest rates.
Well, again, the way I look at interest rates right now is that they finally ticked up, and that gave this market, that lit the fuse on what I thought was already a sell-off. So as interest rates are going up finally for the first time in a long time, we're going to get that idea, that notion that, hey, maybe I could take less risk with my cash instead of keep buying the QQQ. Maybe I could put it into something where there's more stability. So again, my Wharton degree, that's my take on interest rates.
Yeah, I was talking with this about my buddy of mine over the weekend, and I'm just like, but really, like, where you the thing is, and why it's very hard to get like super long-term bears is, where are you going to put the money?
Exactly.
I remember this was back when the heck, right before the financial crisis. I remember I was getting really worried about the market, and there was a lot of things out there. There was some preferreds, and I was just like, I was piling them down like 5.5%, 6%. I'm like, sold, boom, boom, boom. This is maybe middle 07. And then I went to roll them over. And they're like, well, now they'll only give you like 4%. And I'm like, really? Buy it. And then the next time I went to roll over, I remember my buddy that I do this with, he goes, the only thing, and this is like maybe May or June of 08. He goes, the only thing out there is Royal Oak Beaumont Hospital bonds for money market for 1.5%. I said, sold. So I took that, and then we went into the financial crisis, and I caught, and he was like, yeah, they don't offer those that money market anymore. And so then you had no alternative to go back into the market. But all right, anything else on your radar here? I mean, I know you're the one that kind of got us started on the VTIQ and the EV craze.
Kenny was there for the SPAC.
Kenny was there, man.
The birth of the SPAC movement. Kenny was there.
Thanks,
yes.
man.
Yeah.
Wait, and that was funny too, because after that happened, Joel was like, Spencer, this VTIQ thing, what is Kenny even talking about? And I was like, Joel, I have no idea what Kenny's talking about.
SPACs, man, it's gonna be big. It's gonna be big. But the thing is, I don't understand. You guys know about the Shaquille O'Neal's putting out a SPAC?
Yeah. So
please elaborate. What does that mean?
So is Kaepernick. It just means like they're among the sponsors, right? Like they're invested in the in this SPAC. So
it's not like you're gonna go. They're not gonna. Shaquille O'Neal's not going public like Green Bay Packers or something like that. I mean, everybody. I mean, that's also a bearish thing when celebrities are getting involved in something they probably don't even know what the hell they're talking about.
Hey, you know what though? But do you remember? Maybe you remember a few years ago there was this whole hullabaloo because Mila Kunis went on about buying stocks. Do you remember that?
Yeah.
Yeah. Okay, but people were like, "Oh, this is the top. Mila Kunis is buying." That was like 1,000% ago.
Right.
Like that was a long.
Are you ready to stick a fork in these SPACs yet? I mean, are you just thinking you got to be a lot more selective?
Well, yeah. I mean, you should know exactly what you're buying. You know, I the only one I'm in right now is, and it's still the same exact price. ALTU, guys, go do some due diligence on this one. It hasn't really done anything yet. You had a 20% pop, and then it's come right back because the market's getting hammered. But this one I've done some due diligence on. I'll let you guys do your own homework on it. ALTU.
That's good. Yep.
Yeah.
ALTU, interesting one. That's one of the ones I got. But really, what I'm looking for tomorrow is punish guys like me who always overstay their welcome in these short positions. If this market, and again, when we're in a bearish environment, Friday usually becomes bearish because people are thinking, oh my God, what's going to happen over the weekend? I better get out of the stocks. We finally are in that environment. But if it doesn't happen tomorrow, they might just flip the switch again, and once you got the options and they trigger, and we get that rippage into a close on a Friday with some options, it could be one of those 2% up days ripping into the close with reckless abandon. And again, as bearish as I am, I welcome that day tomorrow because I love those days. So
it sure doesn't feel like right now. I mean, I haven't done my handy number, my handy dandy levels yet. But we're 50 points off that low, so now you're gonna have people like, did I miss a dip? So you get that backing and filling, right? So if we start to go back towards that area, for me, I mean, it's easy to keep it, nice and simple with the, the round numbers. So, we're 30 points away from 3,800. We haven't closed under 3,800 in a long time. Let's see if that holds for one or two closes before I start getting super bearish. Did get a little silly when it got down there and it was looking bad, but you get bailed out sometimes. But anything else, or should we do some battling tickers here, Spencer? We've never done this segment. We'll have the kids in the chat throw out a ticker, and then Kenny and I will go at it. If we both are on the same side of the trade, then you do the opposite.
You do the opposite.
Yeah, so we can do that.
Chat, throw in some tickers, and let's see if Kenny and Joel have that'll be the game. If they have the same opinion, do the opposite. And if they don't, then make your own decision. Oh, of course, the first ticker out of their mouths is GameStop. Actually, Apple was first.
Kenny, do you want to go? Do you want to go first? Which one you want to? Well, I say very little on GameStop, so I'll let you do GameStop first, and I'll give my opinion.
GameStop, if you're crazy enough to be short the stock that refuses to go down, you're shorter right here at 131.50 with a 137.05 stop, looking for 125. How about that for specifics? I think you just had another squeeze on this thing. I can't believe it happened from 122 to 150 almost. Now it's pulling back to the VWAP. So if it stabilizes here, you're still bullish. But right now you're on the cusp of it rolling over. Again, it's a very, very difficult stock, especially day to day. How about even minute to minute on this one?
Yeah, I mean, I'm just going to try and go a little bit technical on you and say, we've made 4 higher lows in a row. So until that trend is broken, I'd have to try and figure out a way to be long. I certainly wouldn't risk down to 115.30. So, 4 higher lows. So until that, you get the highest low of whatever the string is, and then you snap that string, then I would turn bearish. So, but I mean, I can't set up a trade like Kenny did here, because if you're going long, you at least have to risk to the close from yesterday. But I'll take Apple, and the reason I said Apple is Triple D and I were talking about buying the dip during this carnage.
So someone in chat just asked Apple under 100 question mark.
Oh, I can't. Here, I'm kind of split on Apple because it did on a relative basis, the way everything's been getting pounded, it didn't make a new low. That's the positive. The negative is that it's getting pretty heavy on it. So I'd be, if I was long here, I'd have a short leash and I'd let it go at that 118.24. But on a relative basis, it looks okay. Kenny?
I got no problem thinking that Apple's going to 109.50 very short term. So bearish Apple. Again, I'm going to stick to my bearishness. I think the Qs are going to 285, and that's going to take us all. That's going to take Apple down.
Okay, good. Oh, yep. And very well. The fact that we're closing down here is not a good sign. It's not a good sign. But if we did get a bounce, I'd be with it. How about, I just saw a tough one here, and I'm horrible on high price stocks, so I'll let you go first with MSTR.
Don't say SPAC. Which one?
No, I will. MSTR, the Bitcoin. Is that a 2-for-1 stock split again?
This is the craziest thing. I was familiar with this thing 20 years ago. This is one of the only stocks. It was a spin-off reverse stock split and became a real company. And then the CEO said, you know what? Screw our business model. Let's just go buy a bunch of Bitcoin and hope for the best because that's our business model now. So basically, that's what MSTR is. If you like Bitcoin, you like MSTR. I don't know what that stock's all about.
Kenny,
and I wouldn't go near it. Short, long, I wouldn't. If you paid me, I wouldn't go near it. So.
Kenny, tell me you follow the CEO on Twitter.
No, I don't. Why?
You need to. You need
really?
to. Yeah. Michael Saylor is his name, and he tweets some really weird stuff.
Oh, yeah, I can imagine.
Yeah, about Bitcoin. So... And he's the CEO of a public company, and he puts Elon Musk kind of to shame,
really?
like with his Twitter. Yeah, he tweets some weird stuff.
Yeah, he's done all right.
Boy.
Joel, what about you?
I think, it's taking much more of a haircut to Bitcoin, man. Unless this is a long ways away, but man, until it gets back over 812. The path of least resistance is lower, but who knows what it can do in the interim. It lost that 50%. It lost it. It battled it. It battled it. It battled it, and it lost it again. So, I don't want to project this move from 30. I don't know. I'm kind of rough on that one. How about one that we talked about a couple weeks ago, and we were on the same side of the trade, and I know you're a huge Kathy fan, and I know you like Palantir. What about Palantir here?
I don't care where the price of the stock is. I like it. I like being invested in the CIA. You know, that is a. Anytime I hear something negative about that stock, it makes me want to buy it. They're shady. I'm in. Their CEO is cryptic. I like that. They're doing weird things with shady governments. I like that also. I'm a fan. I love that stock. I own that stock. I'm never selling that stock. It's not a trade. It's not a swing. It's an investment. I love it. Love it.
Yeah, you got some monthly support here too. I mean, look at that. 3 months in a row banging on the door. And when this started to come off, we talked about the 25 level. It's dipped and dived and ducked above it and everything. But man, you're putting a bunch of lows here in the same area. I'd probably give it I'm not eternally bullish on this one, but I'm not going to fade you on that one. All right, Kenny, 2 minutes to go here. Always a pleasure. Always, I send you that text. Can you come on? And you always have a humorous response. I just love it. Love you, man. Can't wait to see you again, and whenever that may be.
Say hi to Jersey for me, all right?
All right, yeah, soon. Right. Soon we'll all be getting together. Listen, I'm going to throw a massive party once we get out of this thing, so I'll fly you guys out here September. It's going to be my 50th birthday, 30-year high school reunion, anti-COVID, pre-New Year's extravaganza. It's going to be sick.
Oh, my gosh.
Bands, DJs, nitrous oxide. It's going to be off the hook.
Tendies everywhere. All right. Yeah. Thanks a lot, Kenny. We appreciate it.
Thanks for having me on, guys.
All right. Hit the big radio to find Kenny. Just a PSA on some earnings coming tonight, guys.
Sure.
Just so you know, Costco is the big one. Costco reports earnings tonight. Smile Direct Club is tonight. The Gap is tonight, I believe. I think that was it. Oh, Turtle Beach tonight.
Oh, look at the street, man. I'm just going to talk about Costco here.
Yeah.
Holy mackerel, is the street bearish this thing. So I'll just say if you get a pop, man, there's going to be some overhead supplying this one. The bullish thing I could say about Costco is I went out there over the weekend with Lisa, and we dropped about a half a G, and they were about a pound and a half lobster tails.
There we go.
They were unbelievable. I think that was about $100 of our orders. So out of pop, man, let's see if the street's leaning the right way on Costco. But that's it, Spencer. That's
I just want to add, you know what? I got scared last March when I went to Costco and they had like no meat. That's when I got scared. I was like, oh my God, Costco's out. I'm scared. Anyway, you heard the closing bell.
Because guys like me went out there in February and bought everything.
That's right. Okay. The Benzinga Cannabis Hour is up next. We've got the Vice President of Corporate Social Responsibility at Curaleaf, Khadijah Tribble. We've got the CEO of Item 9 Labs, ticker INLB. We've got Narmeen Jarus from Exclusive Brands on the Benzinga Cannabis Hour. You don't even have to do anything. Our stream is going to end. It's going to autoplay into that. So everyone have a good rest of your day.
One sec. If anybody needs any rice, I bought 2 25-pound bags of rice in February, and I'm just through the first one. So if anybody needs any rice, give me a call.
Thanks, Joel. All right.